What's up, guys? Welcome back to the channel. Welcome back to another video. If you're stopping by the channel for the first time, please consider subscribing to my channel. And while you're at it, smash that like button for me. I really would appreciate it. Also, hit that post notification bell so that you're notified every time I upload a new video. Well, we got the dip everybody was looking for. It happened this morning on news of a better than expected jobless claims report. Also, people, investors, large and small, are trying to determine what is going to happen with interest rates, since it seems as though the labor market could be on the rebound. But we also have a government shutdown that's been thrown in the mix. Government will shut down, guys, on September 30th unless a deal is struck between the Republicans and the Democrats. And it doesn't seem as though the Republicans want a deal. At least that's what I've been reading. But let's dive into this dip that everybody hopefully took advantage of. Stocks fall for a third day as once hot AI play Oracle falls. Yields increase. Talking about treasury yields. And we'll get to that. Stick with me. Stocks fell again on Thursday, bogged down by a further pullback in Oracle and Nvidia, as well as a jump in rates. The S&P 500 dropped 0.8%, while the NASDAQ composite lost 1%. The Dow Jones Industrial Average shed 170 points, or 0.3%. Oracle and Nvidia saw more losses in the pre-market, sliding 4% and about 1% respectively. The two were on track to fall for a third straight day as questions over the state of artificial intelligence trade lingered. Right there, guys, that's a well-known trick of the 1%. See, we've been running this thing at all-time highs. So what happens is the 1% will start throwing out propaganda to do what? Spook investors so that what? The stock market could dip, and then they swoop in and they buy the dip, and then guess what they do? They run it back up. That's a common trick of the 1%, guys. Artificial intelligence isn't going anywhere. It's here to stay. But anytime they can plant that seed of doubt in investors' minds, it will cause a dip. And then they go in and buy the dip and run it back up. Now, that's just my opinion. You guys go out and do your own independent research and your own homework and come up with your own conclusion, because I'm not a financial advisor and I'm not trying to play one here on YouTube. The market action appears to be reflecting concerns about record high valuations and potentially risky circular relationships in the AI industry after some recent deals. What are they talking about? People are saying Nvidia investing $100 billion in OpenAI is a little bit fishy. Is Nvidia trying to prop up the artificial intelligence ecosystem? Some people are saying, are these major companies trying to prop up the artificial intelligence ecosystem or industry? That's a concern. And then you had Chair Jerome Powell on Tuesday say that equities valuations are high. That spooked the market as well, guys. But that's what we're dealing with here when it comes to the stock market dip today. Through Wednesday's close, Oracle, which led the latest leg of the bull market, is off more than 10% from its recent high. Thursday's decline was partly driven by a sell rating issued in new coverage by Rothschild Redburn, which predicted a 40% pullback because the market materially overestimates how much Oracle's recent AI deals will boost the company's core cloud business. A jump in yields added to the selling in tech shares, causing investors to take off some risk. The 10-year Treasury neared 4.19% after data on initial claims for unemployment insurance came in lower than expected. First-time filings for jobless benefits were at a seasonally adjusted 218,000 for the week ended September 20. The Labor Department said Thursday. That's below the 235,000 that economists polled by Dow Jones had estimated and 14,000 less than the previous period revised initial unemployment claims, which had also eased after seeing a brief spike the week before that. So the jobless claims, which basically unemployment benefits, came in lower than expected. That means not as many people filed for unemployment benefits than expected. So what does that say about the labor market? Maybe it's a little better than we thought. The solid jobs data, as well as a strong upward revision in second quarter gross domestic product to 3.8%, which could mean the Federal Reserve hesitates before cutting rates again, undermining a key catalyst for the bulls. They're just saying here, guys, GDP estimates looking pretty strong. Solid jobs data coming in strong could put a pause on interest rate cuts. Market didn't like that today, so that contributed to the sell-off this morning. Investors are also cautious ahead of the personal consumption expenditures, aka PCE price index, due Friday, which is tomorrow, and are monitoring developments regarding a potential government shutdown. If the government were to shut down, that could mean mass firings in the federal government, as the Office of Management and Budget has said in a memo that agencies should prepare reduction in force plans. This is according to NBC News. So all of those things contributed to the dip today. Now, the market, I believe, will be resilient and will start the recovery, but we got the dip we asked for. A lot of y'all asked for the dip. We got it. Who took advantage of it? Drop it down in the comment box and let me know who took advantage of the dip. Listen, man, get in position. Fourth quarter, I think, is going to be legendary. So get yourself in position, man. Get yourself in position. If you're stopping by the channel for the first time, please consider subscribing, share the video, smash the like button. Thoughts become things. You can see it in your mind. You can hold it in your hands. You guys keep chasing your greatness. Never stop believing in yourself. Stay healthy, get wealthy, and I'll catch you guys on the next video. Peace. Moo is going to give you some NVIDIA stock when you open up a new Moo brokerage account and make a deposit. All you got to do is get down to the first link in the description box. That's the Moo brokerage link. Click on it and get all the details on how you can get some NVIDIA stock. Don't delay, act today. Second link down in the description box is the Wealth Builders Financial Community on Patreon. Guys, all we do in that community is help each other build wealth, get to financial freedom and passive income. If you want to be a part of our team, all you got to do is click on that second link. It'll take you over to Patreon, and then come sign up for the fastest growing financial community on Patreon. We'll call the Wealth Builders.